Good morning, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show with this man, all the way from sunny New Jersey. Having a bright day this morning, Dimitri Pargamanik. How you doing, D?
Good morning, Will. How are you?
Great. Nice sound. Sounds good. You want to start with the disclaimer?
Yeah. Good morning, everyone. Before we get started, keep in mind, Will and I and Market Chameleon, we're not a registered investment advisor. We're not a broker-dealer. We're not telling you what to do. We're just sharing ideas. If you need advice, call your registered investment advisor, call your broker. That's what they're there for, to give you advice, provide you with guidance. There's the disclaimer.
Awesome.
And with that, let me share my screen. And really quick, as I'm doing that, as a note, anybody joining us for the first time, Will and I, we do these shows in the morning to help answer questions you may have about Market Chameleon tools, data, or analytics. We do provide two ways you could ask your question. One, we have a link out there to Zoom on the live chat on YouTube. If you click on it, it takes you over to Zoom. Once you're in Zoom, there's a button, raise your hand. If you click on that, we let you in. You could ask your question live. We also, if you prefer to type your question in, you could type it into the live chat. Will's watching it. He'll read them back to me. I do think, Will, you said we will have somebody come on, ask a question today.
Yep. He's already in the queue. So
Okay.
Whenever you're ready after the pre-market report, get him on.
And actually, before I might take this because we did push out some new features today. So I wanted to cover it. There are three main new features. I don't know how many I'm going to get to today. I'm going to also maybe cover tomorrow. And it has to do with analyzing intraday returns. It's very important especially for very active traders, options and stock, to get a picture of how stock tends to behave intraday. And especially this will be useful for people trading 0 DTE options or trading based on shorter term out. So we'll try to cover that today. And as a reminder, I'm going to be gone tomorrow. I'm going to try to do the show tomorrow. After tomorrow, I'm going on vacation, so I'm going to be gone for
And the schedule after Dimitri's gone, at much request from the Chameleon community, we will try to do shows as many days as possible. I have a guest host, surprise host on Monday and Tuesday. Wednesday right now looks like we're off, and then until Dimitri comes back, we have a blast from the past. So 3 special guest hosts right now. So we are going to come on. You guys can still chat, ask questions. The answers won't be as awesome as Dimitri's, but we'll try to keep it going and let you guys communicate and ask questions and share ideas. And with that, you want Rob to come in?
Yeah, let's take the question first. If I could answer it quickly, then I'll move on, try to demo the new features. So we'll see how that goes. And tomorrow, I think I'll still be able to do the show. We'll talk about them tomorrow.
All right. We're going to bring Rob in all the way from sunny Chicago, where it's the most beautiful city on the water in the summer.
Awesome.
Rob, come in. Just turn off your mute. Thanks for coming in, Rob.
Hey, Rob. How's it going?
Good. Good morning. Good morning. Can you hear me?
Yes. Yeah. Good morning, Rob. How are you?
Great. Always great. Always something to get up to here with the morning show. The best show on on the web, no doubt.
Oh, awesome.
So yesterday, the site for me is tremendous because it offers so many tools and there's so many ways to use it, so many layers.
Yep.
And I was experimenting last week. I'm a little dyslexic, and so I tend to think of things backwards sometimes, which can be a real problem, but can be also kind of advantageous sometimes. So one of the things I was thinking about was that if we do if you go to the call scanner, let's see if you could pull that up, Dimitri, just your under your scanner. Yeah, your long calls.
Okay.
Go to long calls. And here in the long call scanner, you have, as you can see, theoretical edge and percent of win rate. All right.
Yep.
So for any given date and strike, the computer is going through and analyzing these based on what I did was I went back up to the top here, back to your boxes for the filters up. Yeah. And over here on theoretical win rate, I clicked in a negative 90%. Above negative 90.
Okay.
Below, no, we want the edge to be negative. We want to show, go back to the box there. Below.
The edge to be negative?
Edge, yeah, the edge, yeah. It's down here below 90%. There it is. Click that. Yeah. All right. So now you're looking at this whole panel and you see negative edges of 100%. Well, that means basically all those options should be worthless, but they're being priced for something in the market. Okay. So it led me to think, well, this theory, and people can try it out. And I've been trying it this week on both calendar spreads and verticals. And it seems to be working out that if those options have a market value, and yet the theoretical value historically, given their date of expiration, is 0, then as a sell side, as somebody looking to sell credit spreads, that might be a good place to start to peg a credit spread. Now, if we go down through here and we look at the ideas of what stock is best, well, you can see that Tesla has a market price of like 127, and the theoretical value is 0. You can go further down though, and if we go down, if we want to take these now that we have your edge sorted, and we sort the theoretical edge by clicking on the top of that edge file. I think it'll sort for you there, Dimitri.
Sort by the theoretical edge? Sort
by the edge.
Or theoretical value or edge?
No, edge.
Okay.
All right. And there we go. All right. Now we come. All right. So we can see some of these, like here, American Airlines. Well, you get 31 cents on that. That expires July 21st. That's a long time to wait. I would bypass that. But we look down here to Adobe, and with Adobe, you got huge premiums. What's going on here? $3.50 premium, and July 21st expiration. All right, let's go back up. Let's go back up to our boxes up at the top here. Okay, and instead of July 21st, which is what this is set to, let's set it to tomorrow, July 15th. Because tomorrow's a Friday, and you're gonna get regular monthlies expiring tomorrow on Friday, and so now we okay. Let's put next 7 days. It's not giving us that this morning. Yesterday it gave me some just with Friday. There now. All right. Okay. Good. All right. And here you can see in the next 7 days, the ones that have expired, that are preparing to expire, and varying market prices. Those are related to, of course, the strike on the other side. The closer we are. Now, Adobe is trading right now at 479. It closed at, I think it was down a little bit in the futures this morning. But when we look carefully at, all right, this is June 16th. All right. Expiration. That, to me, all of these, depending on what strike and depending on how much safety you want, even though the probability of touch on all these seems to be equal, can be a good starting point for the sell side of a vertical or a calendar spread. Now, you may think and then this is another thesis that I think people have to put into their analysis of what you got to go in and figure is Adobe. There was some news that came out last week on Adobe having certain aspects related to the AI boom. And, we get these booms going through. We had the crypto boom. We have the, whatever. Okay. But we got AI going right now, and AI is probably going to run for a while. But Adobe had some connection for that. I can't remember what it was I read, but there was some connection. So it's been kind of on a race to the top. It's been really going. But it's kind of stalled out here on the charts. If you're looking at your momentum charts and your things like that, and depending on the time, it's kind of got a stall. So again, based on the theoretical value, what I've done here is selected one of these that I feel like, okay, it's at 479. I'm quite certain that at 530 or maybe even for tomorrow 505 for a vertical might be a good place to start with your strike. So you go down, you pick the strike, and then you got to go then on the opposite side and do a similar analysis, but for the side of your calendar call or a spread or your vertical spread that will give you, what you think will be profitable on the side. And it was very interesting when I pulled these up. The theoretical, when I actually executed the transition, the trade, they did come up with two things that I like very much: a huge theta burn on the short one and a much reduced one on the long side, on the calendar spread. Yeah, the vertical, not so much. But anyway, so that was my theory, and that's the experiment I'm kind of running with this week to see if it works out, and then if I can repeat it and use this section of the site as a tool to get starting points for introducing spreads. And I just wanted your thoughts on that.
No, it's a very, but just as a note, Adobe, this little E, they are expected to report earnings that cover that expiration. So that's another thing to take into consideration, which could make you, and like with this, the thing with the AI, like you mentioned, the history so far, all our historical data would have not factored that piece in because that hasn't happened in the past. So we're not sure yet if they come out with earnings and if they say, well, we are all in on AI. And then because we have a little bit of history to see, like, what happened to Meta or will help me out. What's that other firm that deals with government analytics? Well, you're on mute. Palantir or
Palantir.
And
Palantir's one, Tesla's one.
Microsoft. Those would be very interesting to compare on earnings basis.
So, like, for example,
what happened?
What's Palantir's
PLTR? I think
PLTR. So let's just take a look really quickly what happened there. So this is Palantir, and you could see here that the straddle was pricing in a 13.7% move in either direction, and it was up 23%.
Wow.
So like you mentioned, it was a great observation. They're somehow tied into this whole AI technology. And I think right now the market might be pricing in, right? Because we are seeing, you're absolutely correct. Like, why are we seeing these high premiums for strikes, which historically, we didn't see the stock reach those points, even during earnings.
Yeah,
we've never seen them reach, those types of extremes. All of a sudden, the markets are given that it's a premium. So there's a signal there, right? We could take that as a signal. The market is is sending us some information, some new information, what's going on. And your observation is correct. Now that they're probably going to talk about AI, most likely, they're all talking about it and Palantir, which they beat earnings, but most of this, I think, was their enthusiasm around AI, right? That they're using machine learning techniques and AI to enhance their services and products,
which they've been using from the beginning.
They've been using from the beginning, yeah, and now everybody's talking about it. And I think that ChatGPT actually is really the big breakthrough, because the way people have been using it, it was still, a lot of it was internal, and it took a lot of development to make it work. This ChatGPT really kind of, made it more open to everyone, like, democratized it, and it is much simpler to build tools around this OpenAI and ChatGPT. Before, you'd have to really build all that internally, which was a very difficult task. It takes specialized skills. But the OpenAI is made it much more simpler to build around. I think Microsoft itself is building its tools around OpenAI, ChatGPT.
Right, yeah.
So they're using the OpenAI, just like anybody here could start using the OpenAI to build tools around, right? So Microsoft isn't actually, they're not, they're using the OpenAI, they're using the AI tools to enhance their own products, but they're not the ones that, OpenAI, they made an investment, but it is open, it's open to the public.
At the end of the day, what's it do for revenue, right? I think Adobe is something to do with their illustration. Like it allows you to use AI to create,
Yeah.
Well,
it's an old. Adobe's been around forever, right?
Ever, yeah.
It's an old time tech company that has entrenched in the people's businesses, and will it add the bottom line at the end of the day, right? It's priced to perfection, right?
Right. So a lot of them are, but let me just take a look here, even during their earnings. So these are their historical. So we do see, 16% drop here. So it has had some big moves,
Well, that to me, again, and I think both Palantir and this points out something, that the more information you get, the more you can craft what you think long-term and short-term may happen in your trade. And just this year, I never traded calendar spreads before, but just this year I've gotten into trading them, and they're really quite good in the sense that if you have, for instance, a long-term view that Adobe or whoever is going to rise like crazy, and the short-term view, it's not going to go much, it's not going to go into a 10% day or a 20, it's not going to blow the doors off.
Right.
What it seems to me that the calendar spread does is you can go out and buy, like, for instance, I got some calendar puts on KRE, the mid-sized banking index.
Yep.
I got them for September, and I've been writing short-term sells against those September puts, which chipped away at the premium I paid. And if it, as long as you don't get a major move in the wrong direction there, of course, but as long as they go against, as long as you're going along, what you've ended up doing is getting a discounted price, it seems to me, on the calendar spread that's in September, on the buy part of the spread, and you're making money all the way up. That idea came there's this guy, Preston James, who runs this thing, an option service, and he does a lot of calendar spreads. He does also cross diagonals,
Right.
But this is, I think, what you just pulled up here on these earnings. This chart, I think, is a tremendous chart for everybody to look at. You should never, with the expected earnings move and also the general volatility move too.
Yeah.
Which is under volatility. Those two are so informative for me, at least. I find them great parts of this site. I mean, nothing else I know even attempts to do this.
Yeah. No, thank you. Yeah, actually, one of the new tools that utilizes this type of view as well. And I'll try to go over, tomorrow, just to give it some more time, because this is an interesting conversation, and I do like the thought process behind it. And when you mention calendar spreads, especially, being long calendar spreads, when implied volatility is low, that's where doing long calendar spreads, you're getting long vega, right? So you're expecting implied volatilities to start ticking up on the long end. Eventually you'll benefit. And when you say September, it's exactly right. If you look historically, I'm going to just go here to SPY. September, here, I'm going to just pull up the seasonality, right? So this is a month by month view of the market, how it tends to perform by month. And September, right, historically is the month where we see the biggest volatility, right?
Right.
Some of the biggest vol, because out of all the calendar months, that one seems to be the one where it gets the bigger drops, right? The bigger sell-offs after the summer. People come back. If the summer seasons, usually the market floats up higher. It's less liquid, I feel like, and you get a lot of stock buybacks pushing the market up. You got your pensions and stuff, and most of the other traders are kind of gone. So you start getting that illiquidity to the upside. You come back, something happens in September, and you get this big, whoosh, because out of all the calendar months, they're
it's funny because people like tout and sell in May and go away, and that's not what it shows, right? I mean,
Correct.
It's interesting that there is a built-in bid to the marketplace, and the fact that people are contributing to their 401ks, pension plans, people invested in the market typically.
Yeah, that's the beauty all those funds have that we don't. I mean, if you're earning money or getting money from your work and you're putting it into your savings account or your market account, that's one thing. But if people are putting billions into your ETF, even if you made some bad investments, you got new money, and so the next time around.
Yeah. And here's a seasonality chart of implied volatility. So you could see
there we go.
In the summer months, right? Implied vols just come in. This is usually, what typically happens, not every time, but this is taken over from 2014. So about 10 years of data. Here COVID happened, so this kind of in there skews it a little bit, but you can see the summer months comes in, and then it starts climbing back up as people come back from their summer getaways, and you get a pickup in volume, right? So we see volume dropping off, volume coming back up, and volatility moving higher into September, October, and then moves back down into the holidays, like when we get, Thanksgiving and New Year's.
So another question is then, as a general rule, or not rule, but suggestion, I guess, is it better as volatility is coming in to be on the sell side of the premium, and as volatility is going to up be on the buy side? I mean, as a general statement.
Yeah, exactly. You want to be right. So if you think it's low, right, and it's going to be moving higher, then yeah, you want to be on the buy side. And calendar spreads from the long side, when implied volatility is low, that's when the calendar spreads start looking more attractive because
Yeah.
the Vega, right, the Vega for longer term options is much higher. So you're getting a bigger discount for those longer term options. So you're doing those long calendar spreads. So for example, for every one click in Vega for a short term option, the further you go out, you're getting a much bigger discount on one click Vega discount for longer term, right? So
Yeah.
so that's where calendar spreads right now. Calendar spreads are probably good because we're in a low implied volatility environment.
Okay. Yeah, good.
Yeah. No, thank you. Those were good observations. I like the thought process behind it, and you're putting things together, stitching things together. And it's a solid theory. That you're testing now. So I think, yeah, that's interesting. Thank you for sharing it.
Yeah, you're welcome. You're welcome. Thanks for letting me in, and we'll look forward to tomorrow with all the new features. If you got time to go over one today, well, we're almost at the 8:28.
I think the bell's about to go off. That was awesome. The Chameleon community loves when fellow chameleons come on and share their ideas. It'd be great if every day this happened. But Rob, thanks for sharing. That was an awesome segment. Thank you so much.
Okay, you're welcome. Take care.
We'll see you tomorrow.
All righty. Bye.
All right. Well, let's say then the new feature for tomorrow. Just what I'm going to do is just kind of let you know where they are though before we leave. So under tools, you have intraday returns over here, and we did put up explain this report. So if you click on it, it'll go through each thing. But the idea is that you could take for periods between the open and the close. If you want to look historically how stock did, you could choose those periods. You could even choose day of the week, number of weeks of observation during events, rerun it. It's going to recalculate these stats for you. We'll go over them tomorrow. Another feature that we pushed out, it's under options, 0 DT options. So if you go over here, this will give you same concept. It's going to be SPY, QQQ, and then a regression of SPY versus QQQ. Pick a starting time of day of the week. It's going to give you a view of what the straddle was priced at, let's say from 9:30, if you want to see from what typically at 9:30, hold on. So let me see why it should be priced in here, but from 9:30, it'll tell you where the straddle, I think it's because we're not open yet, where the straddle typically is priced at 9:30 in SPY or 9:40. So you could start comparing it to today's prices. It'll tell you if it's a premium or discount. It'll also tell you, well, historically, besides what the straddle was priced, how did the stock perform in that period versus the straddle to see, well, what did it actually move? Did it move enough to cover the cost of the straddle or not? And on top of that, on the options chain, if you're in the options chain and you're trying to run theoretical values on 0 DTEs or 1 day, we're not open yet, but what this will do is, and we didn't have this before, is you could run your theos, right? It'll match up once it's open, but what it'll do is say, if it's 10 a.m., 10:42, whatever it is, from 10:42 to the end of the day, you rerun your theos and it'll tell you, what that option or straddle or whatever historically would be worth. So this way you could compare at any moment of the day. You could take a look at the options and say, well, what are they priced now, and what did the stock tend to do, from 10 a.m. to the close, or from 3 to 4. And this will help you out a lot analyzing those 0 DTs and intraday. So we'll go over that tomorrow, but I just wanted to point out where they are. So if you wanted to go right now, kind of play around with them, you can, and then we'll do a more in-depth overview.
And if you have any questions playing around with it, or things you see that look off, email us support@MarketChameleon.com. Yeah, that's great, D. Awesome job, Rob. Awesome job as well. To the Chameleon community, anyone who has something they're doing or questions, please, any day, come on over. That's why we do the show, and the shows that seem to be the best are the ones where we participate with you, the Chameleon community. Awesome job, Dima. We'll see you tomorrow, my friend.
Thanks everyone for joining. Stay safe out there. Have a great trading day. Hope